Ladies and gentlemen, welcome to The Jake Show.
Corbin, we have talked a whole lot about a bunch of different topics in the little bit of time we podcasted together. By the way, Tanya whooped your ass in views yesterday or last week. So
it's the appeal.
Yeah.
I don't have it. I'm working on it.
I may have to reconsider my co-host.
Yeah, I get it, man.
But
I've been fired before.
Yeah, is that so? Well, we've done a lot of talking about a whole lot of different topics, but surprisingly, I don't think you and I have talked a whole lot about what we actually do for work. We've mentioned it, but we haven't really discussed in detail what we actually do. For those of you who do not know, I do mortgages, so I do the financial side of buying a house. I give you the money that you need to buy a house. Corbin, how would you explain your career?
Yeah, man, it's pretty simple. It's really just insurance. I do property casualty, life, and some commercial. So it's really just trying to insure the things that people own. A lot of times, it's the reason why we became good friends is because I work with a lot of realtors, a lot of lenders like yourself. Just try to make sure that their clients are getting the best deal. So I'm a broker myself. Don't work for like a captive carrier, which when you think captive, you think like State Farm, Allstate, kind of these carriers that they only write one brand of insurance. And then so we write with a lot of different carriers, about 30 on the home, 30 on the auto. And we do write with some of those captive carriers, which is funny enough, but prices differ, compared to them. They can do a lot of things that we can't do on our side, but at the same time, I'm still shopping the whole market. So it kind of helps out your clients, helps out the people that come to me directly after staying with a carrier for so long. They're like, man, this keeps going up. I'm like, well, let me see what I can do. So long story short, just try to shop insurance for a lot of people on their home, auto, commercial, life. It's kind of what we do.
And that was an ad by Corbin McBride. Insurance. Corbin, I'll be honest with you. I've been mortgages now for going on about 4 years at this point. And I'm sure what I'm about to ask, I'm sure you can relate with on your side of things. But everything you just described, I don't know what the hell you're talking about. I get the brokering, comparing, but all the other stuff, sometimes I'll be hearing, you'll ask for certain information to get a quote, and I'll tell it to you, and you'll explain like the difference of what this means, this deductible and this deductible. I get a very general idea of what you're talking about, but I'll be honest with you, I do not know what you're talking about half the time.
Hey, it goes hand in hand. You tell me some stuff about 1003, and I go, I don't even know what the hell that means. Mm-hmm. So it goes hand in hand. I try to pick up some things like yourself. It's a little bit more important for me to understand mortgages than it is for you to understand insurance. So I guess that's where that kind of trades off.
For sure. I think, on our side of things, mortgage guys, all that we care about is the money.
Yeah, you just care about the premium.
Whatever the amount, that's all I care about. I don't care if all you're insuring is the floor.
Yeah. Well, your underwriters do, let me tell you.
They do.
Fight with them often.
They do. Hey, I fight with them more than you fight.
Yeah, that's true. That's true.
Needless to say, I got a question for you. In terms of mortgage and real estate, how many people that you talk to, I get a lot, but how many people do you talk to expect you to be an expert in everything there is to do with real estate?
Oh, man, a lot of times, by the time they get to me, you've done a good job of explaining everything. Mm-hmm. But then again, no offense to anyone out there that doesn't get it, because, you're worried about your job. I don't understand a lot of things with taxes. I don't understand any of that. That's because it's not my job, So a lot of times the main thing that they don't understand is how the insurance is getting paid. So that's the biggest part that I need to explain to people is how that policy is actually going to get paid out, because they think that they just make that first lump sum right there when we're talking about it. So escrow is a big part of kind of what I do and what I explain. But yeah, a lot of times people do expect me to understand the whole loan, and I'll just divert them right back to you. Yeah. I'll go, hey, you remember Jake's number? Go ahead and call that.
I don't know. I find it very funny sometimes that in the mortgage side of the real estate transaction, we deal, in my opinion, the most sensitive part of the whole transaction because, I mean, we are asking for all the
Yes.
documents, know all your financials.
Absolutely.
We know all of your problems, all your money issues. We know if you're about to get divorced, if you're,
Definitely.
all the good stuff
Or
there.
you just did, or
Yeah,
mom is giving you a little bit of money down. You don't
Mhm.
have the money.
Literally,
a lot of different things.
we get all the stuff, and I feel like a lot of times I'm at the point where I feel like a lot of times I end up being the person that they basically think is coordinating the entire transaction, if that makes any
Yeah.
sense. I don't say that. I don't say that arrogantly at all, but it seems to be true. They'll be asking me about repairs. I'm like, I'm not your real estate
Yeah.
agent. Or they'll be asking me about what insurance policy should I go with. I don't know, man.
Hey, well,
go
next time they ask, just let them know mine.
go with Corbin's.
Yeah.
You know, people just think and expect that I know everything, even including taxes. People are asking me how will this affect my
Yeah.
taxes and stuff like
I
that.
get a
and I'm
lot
like,
of tax questions as well. And that's one of the, like I said, I don't understand taxes very well.
yeah,
I'm on W-2. I can just turn mine in each year.
Yeah.
And try to figure it out.
same here. We get a lot of tax people that don't want to work with me
Yeah.
and stuff like that. But
I have a question for you. Do
what you
you
got?
you ever get hit up by these credit repair people, and do you believe in them at all?
So we don't get hit up by them, but I have a very strong opinion on it. I think most of them are all crooks.
I've heard that from several lenders.
We have a lot of people who reach out to us and tell us that they, are getting their credit fixed through a credit improvement person group or whatever you call it. I don't know the technical term for it. All that happens with you, I'll tell you exactly what a credit repair company is going to do. They will have you automatically dispute everything that is negative on your credit. The thing about disputes are if the total amount of your disputes accumulate to an amount more than I think it's like $1,000, we can't do anything with your credit until that dispute gets resolved.
Really? So it's locked?
We can't do anything with it because basically when you dispute an account, the credit bureau is going to give you the benefit of the doubt as if that derogative account has been fixed and repaired.
Yeah.
So immediately, if you dispute a bunch of bad accounts, your credit score is going to rise instantly because they're not taking into account the bad. The problem is if you really did sign up for Advocare or something like that, and you're just trying to get out of paying it, by the time you get to me, we're going to tell you we can't have this dispute. So either we're going to be held up for a long period of time, or you're going to remove that dispute and your credit's going to plunge from it.
It's only the limit's 1,000 is what you're thinking?
I have to look back at the exact number, but it's a very low amount.
Man, 1,000 is like, you pretty much grab anyone 23 and older, they're probably going to have $1,000 credit cards or anything.
Literally.
So
I think the biggest case is the collection accounts. That's where we see a lot of these people disputing these items. But again, going back to the credit report company or the credit improvement company, that they always dispute everything. They usually put you on a payment plan to get the credit resolved. You think that you're doing something noteworthy because your credit score improved immediately because of the disputes.
Yep.
And then nothing happens.
Or you go buy a new Tahoe and then you can't buy a house.
Exactly. Your credit's going to do nothing for a long period of time. You'll eventually realize that your score is not going up after the initial increase. And when accounts start coming back as the dispute has failed, it really was you who signed to do the Advocare or whatever. You get mad at your credit building company because they're not doing their job, but you're under contract to pay them for a long period of time.
Yeah.
And now the credit repair company has a collection against you too.
Yeah, that's always good.
I'll tell you the best advice I can give anybody who is facing any type of credit issue or needs to get that credit score. My best advice for anybody that needs to get their credit score up: don't bother wasting your hard-earned cash on getting a credit repair company to literally waste your time. Just talk to myself or honestly any lender out there. We have programs in place that will tell you what you need to do to get your score up to where it needs to be.
Yeah.
We're not going to actually do anything for you outside of give you the facts and the game plan of what to do, but you will know, again, for free, what exactly I need to do to get my score where it wants to be.
Yeah.
I'm glad you asked that. A lot of people, that's honestly the thing that pisses us off the most.
Yeah,
in
I'm
my
sure. I
office.
mean, I see them a lot too. They try to work with me to try and get to like some lenders or some other people in the
Mhm.
real estate industry to try and kind of market themselves and be like, hey, we can save deals for you, save clients just because we're going to repair that credit. But a lot of times I don't see it working out.
No.
So
Time to pay the bills.
Hey guys, quick break from the show. If you don't already know who I am, I'm Jake Martinez. Not only am I the host of The Jake Show, but I'm also a veteran mortgage lender. Now, if you're not really sure what a mortgage lender does, I'm basically the guy who helps you figure out how to actually buy a home or improve the one that you already have. I look at your income, credit, and goals and show you what's realistically possible, whether that's buying, refinancing to lower your monthly payment, or just getting a clear game plan on what you can and are able to do. No pressure, no confusing bank talk. We can even run everything with a soft pull so it doesn't hit or affect your credit. If you got questions or just want to see what your options are, hit me up anytime. Call or text 940-389-5443. I would love to see what options are available to you. Now back to the show.
Licensed Texas mortgage lender. NMLS number 2453141. Equal housing lender.
I'm curious. You said the other lenders you talked to, they also hate them.
yes. Pretty much. I mean, there's a lender I know out in West Texas that she uses one and she kind of swears by it. So I don't know if that's like a one-off situation where she does see it work, or maybe the company is just maybe they're doing something fishy. But
I've had a realtor that has worked and referred one of my clients to a credit repair person. It wasn't like a credit repair company. It wasn't like credit repair, Texas or something like that. It was like, I'm making up a name like John Douglas, credit repair expert or something like that.
It's the same.
That I think that has some merit to it, because these guys, they don't necessarily act as necessarily a credit repair company, but more or less a credit improvement coach.
Yeah, like your advisor. Yeah.
These people like that will actually sit down. Here's the thing. The guy that I'm referring to, probably the same person you're referring to, more or less their most important job is for somebody to practically give you a punch in the nuts and tell you, you need to fix this. If you're not going to do this, don't waste anybody's time.
Yeah.
Yeah.
So, which at the end of the day, they probably just tell you start paying off accounts.
Literally.
Literally. It's like, oh, I could figure that out myself. Now I got to pay this guy's invoice.
For sure. It's on the topic of credit repair, the best advice I can give anybody who needs to see their score go up, a bit. Most of the time, a bad score comes from the result of collections.
Yeah.
Collection companies, all they want to do is get some money from you in return for the debt that they paid from whoever. We see where if you just call and ask and are willing to fight with them a little bit, more 9 times out of 10, they will settle that debt for honestly like 10%.
I've heard that. I've heard that because they buy the debt at such a discounted rate.
Yes.
So they're just trying to get their money back, their investment on it, and then a little bit on top of that. So as long as you find the right number with that collections agent, then you usually can get that settled.
I would not be surprised if you have a collection account of $1,000 right now for, I don't know, Pokemon card or something like that. I don't know.
That would be brutal.
If you talk to the debt collection company that now owns the debt, if you said, I will give you guys $100, take it or leave it. If you don't take it, I'm not paying you anything. I bet they take it. They won't take it on the first call. You'll have to call a few times, but they will eventually take a deal like that. I guarantee you.
They'll have to go to their manager, try to figure it out, see, hey, how much are we willing to take on this? Yeah. It's funny you brought up the Pokemon cards. It just reminded me of something. It reminded me of that one app. Man, I forget the name of it, but it's the one where it's kind of linked to DoorDash. It's linked to like Amazon, a bunch of these other ones where it's like the pay now or buy now, pay later kind of apps.
I know what you're talking
Yeah,
about. Yeah.
those crack me up. You know, you have a $30 DoorDash from McDonald's coming your way, and you want to get it now and pay interest on it. It just, I'm like, what the hell are we doing?
Our grandparents would be so mad.
They would be
at
so
society.
mad. Dude. My mom would be mad, man. It's funny, but no, the Pokemon cards just reminded me of those apps, and I just think those are so predatory
Oh, I agree.
towards young people.
I
'cause
agree.
A lot of young people aren't very financially literate, so they see that, man, I am hungry, you know?
Yeah.
Let me get the McDonald's.
What I've seen the ads you're talking about here, or like the promos.
Yeah.
I've never read one. I just don't do it. Do you have any idea like what the interest on those are?
No, I'm sure.
100%.
Yeah, I'm sure they're payday loans type of things where my uncle actually used to own a payday loan company. And the name of it was Gotcha loans.
Serious.
I was like, that's crazy.
Serious.
Yeah. Like as soon as you get it, gotcha.
I'll tell you, one of the most interesting and honestly sad conversations I've ever had was with one of my old mentors who used to run I don't know the technical term for it, but one of those random car lots that you see in the middle of the city. They have all these clunker cars, and they say like no credit check.
Yeah.
You know, one of those type of dealerships.
Hot title.
Yeah. One day, him and I were talking, and I asked him straight up. I was like, "Hey, like, how do y'all make money? Like, what's y'all's opinions? You'll see a lot of repossessions, don't you?"
Yeah.
He goes,
Oh,
"Oh,
yeah.
when you buy the car, we know we're going to repossess.
Yeah.
We're banking on we're going to repossess
Absolutely.
that car in 6 months.
Yep. They get the car back and they get the 6 months of finance.
They get the 6 months of finance. They put it back in the lot.
Absolutely.
It's all over again.
Oh yeah, it's. I mean, that's why that term of the used car dealer, you know, you can't trust a used car dealer. That's where that comes from. Cause,
Yeah,
you know, they kind of do have predatory loans and financing on it, and then they just get the car back. They're kind of mad whenever you pay off the car.
they are, because it goes against what they wanted to do.
Exactly.
I tell you, talked about young people and predatory style financing. Me in the mortgage world, seeing all the rules and regulations that we have to abide by in terms of making sure that when people get a loan, they know exactly what they're getting and you're not screwing them in any way. I really have like a bad taste in my mouth for car salesmen.
Yeah.
I'm not saying they're all bad, but
It's going to be a hot take. I don't know if you've ever been on Instagram in the last 2 years, but those boys.
What you got?
No, they're always, people have that same take where it's like, there's no reason that I shouldn't be able to go online and just buy straight from the manufacturer.
Mm-hmm.
Like, why are dealerships even a thing? And then you have all of the, you know, the salesmen from the dealerships in the comments just being like,
I've heard I heard that was a lobby thing. Somebody told me a long time ago, many, I don't know, like in the 50s or something like that, that became a thing. And lobbyists there's some kind of U.S. regulation rule that prevents that from happening.
you have to third party from the manufacturer.
Yes, I don't know the technicality with it, but I heard that somewhere from someone who knows their business.
I don't have enough knowledge on it to speak on it, but
Yeah.
From what I understand, just the brief information that I have, I think it's where a lot of these dealerships, the manufacturers back then didn't have the ability to get cars to a lot of places. So the dealerships popped up in like smaller towns and like places where you did need auto sales, because we didn't have freight like that back then. But, you know, then again, I have no idea. But yeah, well,
I'll make this clear.
Car salesmen are.
I'll make this clear. I'm not against the car salesman, like the person. I just don't like the general practice of how easy it is to buy a car. I remember whenever I've bought my vehicles, I've bought vehicles before I was in the mortgage game, and I bought in a vehicle after I got in the mortgage game. And after I became a mortgage lender, I remembered I had a little bit more study and awareness of finance at that time. So I remember walking to the dealership and I kind of had an idea of how this would go. I had all my documents ready to give them and stuff like that. And they didn't even look at it. They asked for my information, social security number, stuff like that, ran my credit. And then it was just like, all right, here's your options.
Yeah.
And I was like, in back of my mind, I'm thinking, shouldn't you like ask for like my pay stubs or my tax returns? I'm like trying to tell them why I shouldn't get the car, you know? Like, I'm on commission, and they were like, no, you're good. This is
Yeah.
it. But like, obviously, I'll be real here. I got good credit, so it is what it is. But my issue is, again, when you have like the high schooler or like the person who's 18, 19, 20 years old walking in with no or bad credit, and they get the 20% interest rate, 7-year terms, and the salesman or the finance guy just has a smile on their face the whole step of the way.
Yeah, and then they got a 20% interest rate on there.
You make $2,500 a month, and you have a $1,500 car payment or something like that.
Yeah.
We have such rules and regs against doing that in the mortgage world. It's just
Absolutely.
it's mind-boggling, and I think it's a little sad that we see that in the car.
I don't think there is such a thing as DTI in the car business.
From what I know, you can just about, unless you have like a 1 credit score and make $1 a month, they will find a bank.
I think they'll
who will
still
give it
find
to
a
you.
way. Yeah, I think they'll still find a way. A lot of times it's financed through the like the dealership. The dealership has their own finance. Yeah.
I remember my first ever car I bought from a dealership.
Did you buy new?
No, I bought used, but I had no credit score at that time. I had no credit. I was a ghost.
Didn't even have a social.
I had a social, but like I had no credit score. I had a little bit of money. I think I had like $5,000 or so saved up. I think that was back when I was in the banking game. And they, by no means, if I walked into a mortgage place, I would even have like a serious conversation about getting me qualified. But damn it, I walked out with a car. I kid you not. I forgot the exact term, but it was a little bit more than 20% interest.
Really?
Yes.
Holy
I
cow.
refinanced out of that quickly
I was about to say,
once I got my credit.
What'd you do? Did you go to a credit union to do the refinance? Or
My local bank.
Okay.
My local bank.
That's right.
But I finally had a credit score at that point. But at that point, I mean, I remember the guy saying, this is the only bank that will give you a chance. In my head, as a young guy, I'm sort of thinking, damn, I better sign this before this offer goes away. Now looking back, I'm like, that son of a bitch. He knew exactly what he was
good
doing.
for 2 hours, by the way.
Yes.
Yeah,
Oh, man.
yeah.
Time to pay the bills.
This is Corbin McBride with Goosehead Insurance. Just coming to you real quick to try to just offer my services. We do anything property and casualty, so that's going to be home, auto, ATV, boat, anything you really own, even commercial business. Happy to quote you out and see if we can help you save some money. My number is 682-282-5051, and my email is corbin.mcbride@goosehead.com. Thank you.
But no, I mean, again, I don't have any issue with car salesmen as the person. Everybody's doing business.
More of the industry.
More of the industry, yes.
I understand.
More or less the lack of regulation and safety protocol to protect the consumer.
Yeah, and I wonder what their regulations are like. Who regulates the car sales? Like, how does that work?
I'd be very curious to know.
Yeah,
I'd be very curious to know about how all that works.
because it does seem like they bypass every red flag.
The stuff that goes down to dealerships would not fly in the mortgage world.
Oh,
I'll tell
absolutely
you.
not. Then again, though, a lot of the mortgage business is backed by
Fannie
Fannie
Freddie,
Mae and Freddie Mac, right? So,
I will say the stories I've heard of mortgage before 2008, before the financial crisis that we caused, it sounded like the Wild West.
Yeah.
The stuff that I heard was crazy. Literally no joke. You could walk into a mortgage office, say you make, as like a 20-year-old, say that you make $200,000 salary.
Yep.
Have to prove none of that, and just sign a document saying that this is the best knowledge of your ability.
Yep.
And you would get a mortgage, whatever you wanted, at a high rate.
Yep.
That literally happened, and that's what caused the crash of the economy.
100%.
It was nuts, dude.
You ever seen the movie, The Big Short?
I have.
It's a
I like
fantastic
that.
movie.
I love that movie.
But one of my favorite scenes in the movie is where they're sitting down talking to those two mortgage lenders at the bar.
Yeah.
And he's like, dude, I've signed 200 deals this month. He's like, I just gave a stripper her third house in Miami.
I remember that. My favorite part of that was Steve Carell's character.
Yes.
Walking. I think after he met with that stripper who bought the third house, and talking about how the rates were going to adjust. I remember him walking out of the strip club, calling up his advisor, whoever, and just saying, "Yeah, the economy's gonna crash."
That is one of the best scenes. Where he literally gets on it. He goes, "Buy it all right now. Buy it all."
And that shit was no joke. There was
No.
no exaggeration with that movie. That's how it was. It was
And do you
nuts.
think those regulations are going to come for the car industry at some point, or you think it's just
I don't know.
one of those things where it's not too big of a deal because
If we
towing a car is not the same as kicking someone out of a
yeah, probably not. If I had to
Yeah.
take a guess, again, if a recession didn't happen because of the mortgage industry, the government I don't think would have gotten involved at all.
Yeah.
I don't really see a recession happening because people are getting their cars
Yeah.
repossessed.
Yeah.
And honestly, I mean, if the car gets repossessed, I mean, it's not as big of a burden on a bank or a financial supplier that if you have a
Absolutely.
$500,000 home, that needs to be sold
Yeah.
immediately. I don't know. It's just nuts. All love my car salesman friends out there. I don't hate you or anything
Yeah.
like
If
that.
you do
I
need a
just
loan, hit them up.
hit them up. I got a few people in mind that are actually really good and they care about their folks, but they're probably not going to ask you for tax returns. So, it is what it is. But I don't know, man. I just the safety protocols, they definitely get annoying on my end. I'm trying to close a deal, but
Yes.
I also understand what they're there for.
Definitely. And they need to be there. You can't be handing someone such a big financial burden whenever their income and their future is so unknown.
I agree.
That's
I agree.
especially the cost of homes nowadays. A new
Mhm.
build is what minimum
I think the average first,
$290.
yeah,
Yeah.
the average first-time home buyer is paying at least $300K
Yeah.
nowadays for a house.
What rates are we at right now? 6-7?
Somewhere in that range.
Yeah. So
Hopefully go down soon.
yeah, we're hoping it took a little tick downwards and then we shot right back up. We are sitting at like a 5.6.
We had the best interest rates we'd had in over a year and a half,
Yeah.
and then we blew up Iran.
Yeah. What was it? It was, I think we were sitting at like a 5.6.
It got in the fives,
Yeah.
and then about a week or two after that,
Yeah, it was quick.
It went
was
back.
quick.
I remember for so long,
You were
everybody in the mortgage lending business, we were all like,
Oh, I remember.
this is it. This is time. We'll get our refis in.
Yeah.
Everybody get ready, get those vacations planned.
Man, I remember.
And then it all went shit.
I remember I follow a lot of lenders on Instagram, obviously, and every other story I saw was like, interest rates are down, interest rates are down. They're posting it every day. And then I hadn't seen it in a while. I went and checked. I was like, oh, they're back up.
We had it for, I think it was actually shorter than that. If I remember correctly, I think it was honestly like 2 days.
So if you close in those 2 days,
that we had a
and you were able to get that rate, good on you.
I seriously think, if I remember it correctly, I think we had went just below the average rate went just underneath 6%, like 5.98 or something like that. And then we had either 2 or 3 days of steady improvement. And then after that, it went up to 6.125 and 6.25 and 6.5. And
now we're sitting at what, like a 6.7?
A conventional loan, you're probably looking at par rate, meaning that you're not buying it down whatsoever. You're probably looking at about 6.625.
Okay.
With a little bit of buy down. I think the average rate now is 6.375 or something.
What's the highest interest rate you've seen in the last 4 or 5 years you've been in the business?
The highest I've seen was not on a standard conventional loan. We do have these loan types. They are called non-QM, non-qualified mortgage loan, which basically means you're getting qualified through a non-traditional means.
Okay.
The best example I can give, you have a client who reaches out, owns a business or is self-employed. In that case, we have to look at your tax returns to determine how much money you make because you write off stuff. And you're running $1 million business, but you show that you made $2 throughout the year.
Yep.
Obviously, that ain't going to fly in the normal traditional qualified mortgage world. So we go non-QM, and that allows us to use either 1099 only or bank statements. They give you an opportunity to have and buy a house. Now, with that, it does come with higher interest rates. I think it's been a while since this one happened, but I do think the rate I'm about to give you, I think happened my first year. So about 3 or so years ago when stuff was really bad. I got a guy. He was just lower of 9%
Oh,
interest
wow.
rate. But again, he
You're-
didn't have a
You
choice.
think he's refinanced since then?
Uh,
Or he can't?
he
'cause
he
it's a-
he actually has. He's actually a friend of mine. He's a great friend of mine, actually. But they bought a house at a great, tremendous price.
Okay.
Absolutely fantastic price. They could refinance, but the house they bought was only like $160,000,
Mhm.
something like that. So they actually could refinance and get a much better interest rate, going from like 8.5 to like 6.5. But because of how low price their home was and how much they put down, they put 20% down with
Yep.
it. The payment would have been like $100 or so, and he just rather not deal with it.
Yeah.
So they actually have not. That's one important thing to also throw out there. The non-QM, it comes with higher rates, and it also comes with usually at least a 20% down payment.
Okay.
So
Yeah.
you got to have some cash up front for the bank to take that on.
That makes sense.
But good question there, man. Well, dude, this potentially was the most interesting or most boring
Yeah.
podcast we've done, depending on your point of view.
Might be the latter, but if
If you're interested in buying insurance, getting a car, or buying a house, you probably really like this.
yeah.
If you didn't, sorry. We gotta show it. We gotta throw a little bit of a little bit of formalness with this podcast here or there. Tune in next week when we invite a prostitute over and talk about her business model or something. So,
You know one? I ain't got any idea.
oh, where's the best place to go down and buy rent out a prostitute?
I believe it's
services?
Harry Hines in Dallas.
Yeah.
That's just what my friend said. I don't know.
I would be so scared to do that. Man. I've heard of friends who have said that, and I'm just like, I couldn't do it, man. I could
Man,
not do it.
With your luck, you go right up to the first cop.
Like 100%, 100%, dude. It's just, I don't know, man. You got to be a braver and crazier person than I am.
Maybe
take that on.
I don't know if brave or crazy is the right word, but one of them starts with an H and ends with orny.
Yeah. Oh man. I would be interested. Not for me personally, but out of curiosity, what's it going? I wonder what the going hourly rate is right now.
I think they differ for sure.
That probably has less regulation than the car business.
You can probably go to Hazel and find a pretty good one for a good price, a bargain.
Oh man. This is a joke. We're not going to bring a prostitute on the podcast. Maybe in the future, but
Yeah,
viewers
maybe when we
won't.
get big enough when I
Yeah.
I don't have a corporate job.
Yeah.
Probably not good optics for the company.
Probably not. Well, anyways, guys, appreciate y'all for listening to this one. I'll promise we'll get back to our normal type production on the next episode. But anyways, I hope if you listen to this, if you are interested in buying or selling, hit us up. And we hope that this podcast helped you out in some type of way. But anyways, guys, catch you guys on the flip. Kids, stay off drugs. We'll see you on the next one.
See ya.
Thank you for listening to The Jake Show. This episode has been brought to you by Jake Martinez of the Martinez Mortgage Team at Ameridream Mortgage Group. Don't hesitate to see what your home buying or refinancing options are today. Call or text Jake at 940-389-5443 to get started. NMLS number 2453141. Equal housing lender. Tune in next week for the brand new episode of The Jake Show.